Hello guys, my name's Colin and this is Colin Talks Crypto. In this episode, we're going to cover my portfolio, as you can see on the screen here. I'm going to dive a little bit into each crypto and why I'm holding it, and I'm going to give you a bit of a heart-to-heart update on EOS specifically. So I've got my portfolio on the screen here for you all to see. This is it currently as of today, May 24th, 2020. And you can see that I have 44% Bitcoin, 27% Ethereum, 24% EOS, 4% Bitcoin Cash, 1% or so of DAP tokens, DAPP, from the LiquidApps network running on EOS, and about 1% or so of silver. And that is my portfolio today. Some of these percentages may surprise you from how I talk about these various cryptos, like how much Bitcoin I hold and how many things I kind of criticize it for fundamentally, and also how little Bitcoin Cash you may consider that I hold, or how little diversification into precious metals such as silver that I hold. So we'll touch on each of these points. First of all, my portfolio allocation has changed over time, not so much due to me trading, because I really don't make many trades, and I haven't made a trade in months, except to buy the silver and the DAP tokens. Literally, that's the only trades I've made in the past, I would say 6 months or more. And as you can see, those are very, very small changes to my portfolio. So on the large and on the whole, my portfolio has remained unchanged for the better part of a year now, and I intend to keep it this way. So one point to make is that the changes in the percentages in this portfolio are natural market changes. Bitcoin's percentage has risen over the past year, and EOS, Ethereum, and not so much on Bitcoin Cash because I don't hold that much of it, but my percentages of these three have dropped in relationship to Bitcoin. And that's just due to the fact that Bitcoin has soaked up more and more value, and the altcoins have bled and bled and bled during this past year or even 2 years. And that is just the way that the market went. So that's a partial explanation for why these holdings are the way they are. There was a point where my EOS holdings was greater than my Bitcoin holdings, and that was about a year ago. I did sell 20% of my EOS into Bitcoin at that time, which I'm very glad that I did, because again, Bitcoin has retained more of its value than the altcoins during this bear market. Bitcoin has dropped less and altcoins have dropped more. Now, a couple points on Bitcoin. So yes, I do criticize its scaling definitely, and its development path definitely. However, I do respect and appreciate that Bitcoin is the #1 crypto, and it was only 11 years ago. It's got the first mover advantage by a fairly long shot. If you look on CoinMarketCap, it's like 150 billion or so, and the next contender, Ethereum, is like a tenth of that. And it's got name brand recognition. Aside from those two factors, I don't think that Bitcoin has much going for it, but what I've realized and what I've come to realize is that those two factors of name brand recognition and first mover advantage are bigger factors than I first realized. Not that they can't be outdone, but the amount of time it takes for that to happen, the amount of time it takes for the market to rebalance and correct based on the fundamentals present can take more years. I think it could take a decade to fully correct out and truly represent the value, the lower value of Bitcoin that I expect to occur. Not so much that I expect Bitcoin to drop, but I expect other cryptocurrencies that have superior fundamentals to surpass Bitcoin. And I do feel that if Bitcoin does not make a drastic change to its congestion in terms of time and slowness to confirm a transaction, as well as its expensiveness per transaction, that it is only a matter of time before it is superseded in market cap by an alternative cryptocurrency. And I don't think that that's only going to be Bitcoin Cash, but I do feel that Bitcoin Cash is a very prime candidate for that replacement because it's a very drop-in replacement as far as code goes. It's a very similar technology although superior. But I think that EOS, Ethereum, even Litecoin, Ripple, unfortunately, Tezos, all these kind of cryptocurrencies will also eat up the market share of Bitcoin during the next bull run when fees go to new all-time highs and congestion goes to, again, weeks at its worst. Maybe it'll even be worse than that. So that brings us back to, why do I have 44% of it in my portfolio? Because it's all about timing the market's recognition of the fundamentals on Bitcoin. And, back when I bought a bunch of Ethereum and it was like the best time ever to buy Ethereum under $10, I was basing that decision on the fact that Bitcoin was congested and stagnated as a cryptocurrency. And you know what? That was the best decision I've ever made in cryptocurrency. It was to invest in a competing alternative, scalable, or at least more scalable cryptocurrency. I made this move here with Ethereum, which grew tremendously. Even today, by today's standards, if I bought under $10 and today it's like $200 something, that's a big gain. So I do want to validate myself in spotting the fundamental failure for Bitcoin, because it's what led for me to have such a good sizable Ethereum holding that I'm very happy to have. And likewise, in similar fashion, that's partly why I got into EOS, is because EOS took it another step further and has feeless transactions, whereas Ethereum and Bitcoin have transaction fees. And Bitcoin transaction fees have gone to an average of $55 during the last bull run in 2017. And that's not to say that Ethereum hasn't had high fees either. Ethereum very much has become congested in the past with the likes of CryptoKitties, and also just adoption, and its fees were too high for the average user to easily use it, let alone for smart contracts to be able to operate with such high gas fees. So Ethereum, in my opinion, is vastly superior to Bitcoin, both in terms of its somewhat lower fees, better scaling, and it has smart contracts. So in those regards, Ethereum beats the pants off of Bitcoin. But Bitcoin has these two qualities that no other cryptocurrency has yet, which is first mover advantage and name brand recognition. That's all that Bitcoin is riding on right now. And my investment technique is to recognize how long can the market remain irrational for Bitcoin, and that's how long I'll hold a chunk of it. As soon as I feel like the market's starting to realize that Bitcoin is not the place to be, which I think will begin to happen at the start of the upcoming bull run when the fees and congestion return, that's when I think that there's going to be an exodus of potential market cap into other cryptocurrencies. Not that Bitcoin's market cap's necessarily going to go down. It's just that other cryptocurrencies such as EOS, Ethereum, Bitcoin Cash, Tezos, Litecoin are going to rise proportionately faster and greater than Bitcoin. And that will be just like in 2017 when Bitcoin becomes congested and fees become too high for people to easily accept. And what we've seen is that that opens up the floodgates for currency to flow into alternative currencies. And I still fully 100% believe that, which is why more than half of my portfolio is based in more scalable assets. And also for Ethereum, it has at least the development promise of Ethereum 2.0, which brings the hope in the coming months, years, probably years, that Ethereum will scale to much greater heights than it is currently. Whereas with Bitcoin, I don't feel that its scaling plans are going to be successful. I think that anyone riding on the hopes that the Lightning Network is going to gain widespread mainstream adoption is incorrect. I don't think that that technology is going to catch on. Proof in fact that currently we have more Bitcoin in layer 2 wrapped format on Ethereum being transacted with than we have Bitcoin on its own Lightning Network being transacted with. And so if that doesn't go to show you a failure right there, then I don't know what does. Bitcoin's own scaling plans are failing, in my opinion. And I don't think that Lightning Network is going to carry it anywhere significant. And also, it's worth noting that it looks like the company, the private company that controls the development more or less on Bitcoin, which is Blockstream, developed the Liquid network to offer trading between exchanges And that's a conflict of interest. So the developers on Bitcoin, the main development team that decides what gets included and what doesn't get included in Bitcoin, in my opinion, is compromised financially and has a conflict of interest because they are guiding it in a direction that provides their own solution to the problem that they themselves created by stagnating growth, by simply increasing the block size to 2 megabytes or 4 megabytes or 8 megabytes, which are all well within the ranges of technologies scaling today. But instead, we have basically the same scaling technology that we had in 2009 when Satoshi first released this cryptocurrency. And so it's not only not keeping up with the modern advents in scaling technology, with internet and broadband capabilities increasing tremendously and storage going to terabytes. It's not only not increasing, but it's not even keeping up proportionately with those scaling things. So again, that's just painting a picture of how I feel that on a long term, the fundamentals of Bitcoin are poor. And I feel that it is going to be relegated to a second place cryptocurrency in the future. And that could very well be that Ethereum takes over, or Ethereum 2.0 takes the lead as the new first place on CoinMarketCap. But there's a small chance it could be something else. I don't know if it will be EOS. EOS is pretty late to the game, but maybe in 10 years. I don't know. I'm not sure about that. I do feel that Ethereum has the greatest chance of being the next contender for successor to Bitcoin. Okay, so that's enough about Bitcoin. That's why I hold what I do. It's that I believe in its grandfather status to the entire crypto ecosystem. And I believe in that for at least a number of years, but I'll be keeping my eye on it as other cryptocurrencies more and more outperform it and add better functionality and features. Okay, so let's cover a tweet I did here. I said, I consider EOS to be the low fee alternative to Ethereum. I consider Bitcoin Cash to be the low fee alternative to Bitcoin. This is why I hold them in my portfolio as a part of diversifying against blockchain congestion. And that's exactly what I was just talking about here. Shout out to Omar with his meme here. $1 fees on Ethereum? Like, no thanks. And $55 fees on Bitcoin? No thanks. And so the thing that Bitcoin Cash and EOS each have that Ethereum and Bitcoin don't have is workable scaling today. EOS has a feeless model, and the fees are really only paid by inflation. Bitcoin has both an inflation model and a fee model. It has both. So in that regard, on EOS, once you own the resources necessary to make a transaction, basically your transactions are feeless at that point. And on EOS, like some other blockchains out there like Tezos, if you partake in reward proxies or rewards systems where you get a return on your investment, you can actually outpace the inflation in the network. So at that point, I would say that EOS actually does have free transactions because you're getting a return on your staked tokens that is greater than the inflation in the network, and there's no fee to send a transaction on EOS. So therefore, essentially, you have a feeless, but also a free transaction for all intents and purposes. And that's something that Ethereum can't say, and that's something that Bitcoin can't say. Bitcoin Cash is sort of in the middle. It has very, very low fees. And so it is superior to Ethereum and Bitcoin in that regard. But again, it's not as much of a scripting language as Ethereum. So Bitcoin Cash has its strengths as money. And that is exactly what its designed purpose is to be, is a electronic cash, peer-to-peer cash, exactly as laid out in the white paper. And in my opinion, the greatest subscriber and adherent to the original Bitcoin white paper. So this goes into why I hold Bitcoin Cash and EOS. I really look at Bitcoin Cash as the counterpart to Bitcoin, a scalable counterpart to Bitcoin. And I have it as a diversification for that exact reason, because when this next bull run comes around, I may only have 4%, but the number of tokens I have here is greatly higher than the number of tokens I have in Bitcoin. And of course, that's because of the lower price. But if there's ever a flippening, I will be set up well to absorb that shock of the failure to scale on Bitcoin's part. So I very much hold Bitcoin Cash as both a believer in the original scaling and white paper that Satoshi laid out, but also as a hedge against the what I believe to be inevitable failure to scale for Bitcoin, unless something drastic happens over here. And likewise for EOS, I hold EOS as a direct counterpart to Ethereum because, again, Ethereum has had congestion and high fees, very similar to Bitcoin, fairly severe actually in its peak. And so for me, EOS is a hedge against that failure to scale and congestion. And EOS is comparable in my opinion because it's a smart contract platform, much like Ethereum is. However, EOS has superior aspects to it, from everything from a built-in ENS that Ethereum had to add on top, 12-character account names. It has a very advanced permission structure with owner keys and active keys and programmable multi-signature levels of different access points, all very advanced here, more advanced than Ethereum. EOS, again, has no transaction fees. There's no going to some kind of fee gas calculator on EOS like there is with Ethereum. You just send your tokens, and if you have enough CPU and bandwidth, they get across every time. And your CPU and net replenishes over time. So it's a very much a different system than Ethereum. Of course, there's always the issue of decentralization, but decentralization is purely a means to the end goal of immutability. Decentralization is not the end in itself. And there's a lot of people out there who I feel have been misled into thinking that decentralization is the end goal in and of itself. And anything that has, 80% decentralization versus 100% decentralization is quote unquote shitcoin, when in my opinion, that's simply not the case. I would much rather have high throughput, high features, high transactional capacity, low fees, and immutability and censorship resistance with a middle ground of enough decentralization to make that possible versus this ridiculous notion of must have 100% decentralization, must be able to run 1 megabyte blocks and Raspberry Pi nodes around the world on laptops built in 1990 so that we can have 100% decentralization. Oh, but we can only do 4 transactions per second. And yes, I'm talking about Bitcoin. And that's essentially the mindset of Bitcoin. And that's, again, why I feel very strongly that that's a flawed mindset. I would take Bitcoin Cash or EOS fundamentals and technology over Bitcoin any day of the week. And I think that they will see success for those very reasons. So there you go. That's why I hold EOS. To me, it's a counterpart to Ethereum. And that's why I hold Bitcoin Cash. To me, it's the counterpart to Bitcoin if and when Ethereum fails to scale. And definitely when Bitcoin fails to scale. At least Ethereum has that 2.0 future ahead of it where it plans to have sharding and proof of stake and gives the hope that it may scale to meet the needs of adoption. I hold 1% of silver just as a hedge. I actually bought that in March. I didn't sell much, but I did buy a little tiny bit of silver. Just because I was not sure what was happening with all the different markets. And I realized that I was all in on crypto. I kind of still am all in on crypto, but I can at least say that I have some silver now. Real quick on the DAP token, DAPP, that I hold right here. It's made by LiquidApps. It cross-links all blockchains together, whether it's Bitcoin Cash, EOS, Ethereum. I don't think it can necessarily work with Bitcoin, maybe, but Bitcoin's fees are too high for it to really do much anyways. But it essentially cross-links resources from all blockchains together. And that's why I feel like it could have a potentially huge future. It allows things like virtual RAM, virtual CPU, virtual accounts, and cross-links resources, as I said, between all these different blockchains. And really its potentialities are quite limitless from what I see. And I envision a future whereby the internet of blockchains comprises of interlinked and intermeshed blockchains. And so this is my 1% hedge in DAP tokens to that future where perhaps this is really going to be huge and this value goes up tremendously. It's one of those high risk, high reward kind of investments on my part. But I do feel that blockchains are going to ever more become interlinked and interconnected. And that's very much the vision of EOS.io, by the way, of which DAP token is built upon. But again, DAP token goes across all blockchains, and it could be really the glue that binds all blockchains and blockchain resources into one very usable and powerful global infrastructure, while at the same time maintaining the decentralization of each individual blockchain on its own, which I think is really, really cool. So that offers sort of a global picture of the Internet of blockchains that is very, very decentralized because it's made up of many blockchains all interlinked together. So I want to give you guys an update of what I feel and think about EOS. I know I have a lot of EOS followers. So as you can tell from what I've said in this video so far, I'm still fairly bullish on EOS as a technology. It's fast and it's powerful. I also still, to this day, run the largest single proxy on the entire EOS ecosystem. That's the Colin T crypto proxy. And I run a secondary proxy called the Colin Rewards proxy. Those are the account names, in which you get a 1.6% APR return on your tokens, which beats the annual inflation of EOS. Therefore, that's why I said it's kind of free and feeless on EOS. So keep that in mind. I am fairly invested, both investment-wise and in the fact that I do run these two very large proxies on EOS. When you add the tokens together that I'm managing on my two proxies, which thank you very much, guys, for entrusting me to do the right thing with your votes, which I feel I have been doing to this day, is about 13 million tokens, maybe 12 or 13 million tokens total. Those are the pros. Those are all the pros that I feel about EOS. Now, what are the cons? I am very able to look at EOS in both a pro and con manner. Just because I'm invested in something like Bitcoin does not mean I am not able to cast a critical eye of its shortcomings. And that goes the same for Ethereum, and that goes the same for EOS. So here, let's lay into EOS on a critical, devil's advocate point of view. It's definitely not a centralized blockchain. And in fact, in some ways, it actually is more decentralized than Bitcoin. And people don't like to hear that, but it's true. And there's many metrics to centralization and decentralization. But I would agree that there has become a bit of a centralization on exchanges controlling the EOS blockchain. That doesn't mean it's actually a centralized blockchain, but we have seen instances in the past where with Steem and Hive, there was a collusion between the exchanges and they did take over the blockchain. So I'm a little wary of that creeping factor in EOS. We have more exchanges than ever before controlling the top 21 block producer positions on EOS. We have the likes of Bitfinex and Huobi, who have been basically running the entire block producer cartel for a long time now. And we have recently Binance joined it to be a new one. And from what I've seen, they've been fairly benevolent with their votes. But to be honest, I'm not a fan of what I would call a broken DPoS system run by exchanges. Because, and I made a video on this before, and my main concern is that I would call it DEPOS, Delegated Exchange Proof of Stake. And that's not what I signed up for. And that's my main gripe. I signed up for DPoS, Delegated Proof of Stake, where token holders have the right to cast votes and weight in the ecosystem, not exchanges voting with user funds on behalf of mostly unknowing users to control the entire top 21 ranks of the block producers. So I'm not happy about that. And basically, I voiced that so often and nothing was done about it that I feel like that is what made me lose some interest in EOS. Again, I don't feel it's totally centralized. I do feel that it's able to operate even if exchanges are controlling it, but I wanted the token holders to have the say. And see my previous video if you don't agree with that, because I feel like I laid it out much more clearly. I'll put the link up in a little card here at the top of the screen so you can see, and I'll put it in the description below so you can watch it. But yeah, I'm not happy with the essential exchange takeover of the block producer and consensus mechanism of EOS. And there's a slight bit of hope. I don't feel it's that great, but block.one has promised in May, which they have 6 days left, to, maybe they haven't promised, they suggested strongly that they would begin to vote on the EOS blockchain with their 100 million tokens, of which they have every right to do as a stakeholder. And they're going to set forth requirements for voting that require geographic distribution, which is a really great thing. And shame on CoinDesk for criticizing them for that, which you have no business doing. I do the same thing with my proxies. Many factors are taken into consideration, both the contributions of each block producer and their hardware, their infrastructure, their leadership, their social skills, their communication with the public, and also their geographic distribution. And that is a valid factor. geographic centralization is another form of centralization. And we do have a lot of Chinese exchanges currently upholding EOS, but it's not the majority. It's just a significant number. So I hope that block.one's voting can help to sway and improve the general decentralization of EOS, both geographically and in terms of perhaps removing some of the exchange power over the blockchain versus token holder power over the blockchain. That subject for me, what I would call DEPOS, has really been what has kind of like lost my over-the-top passion for EOS. And so now I still hold it. I'm not selling it. I will reevaluate in the upcoming bull run what I'm going to do with my EOS tokens at that point. But until then, I'll be holding. But that's what made me step back and take a look at EOS with a little bit more of a careful eye and just keeping my eye on things, because the general direction that it's heading seems to be somewhat, in some ways, slightly approaching the Hive Steam situation. And, keep in mind that that took several years to unfold, and EOS has only been around for a year and a half or so, and or maybe 2 years. So I'm in this for the long term. I'm a long-term investor. And if I see something heading in a direction I don't like, just like Bitcoin with its high fees and its scaling issues and congestion, I brace myself accordingly. I invest accordingly. And so my general plan, to be completely transparent, is to watch what happens with EOS. And if its decentralization continues to worsen, and I feel that exchanges really just keep gaining more and more control and the average token holder really has less and less, then I will be reevaluating my EOS holdings in the upcoming bull run. And if I need to, I may sell some of it for either Ethereum 2.0 at that time, Bitcoin Cash, or Bitcoin, depending on how I feel about it at the time. Probably not Bitcoin. But so that's my plan right now, is just to wait, watch, and evaluate. I feel that I've been outspoken enough about my opinion about EOS, and the community, if it doesn't want to make that change, or even worse, if the community is unable to make that change because the exchanges have too strong of a foothold in the block producer top 21 rankings, well, it may not be possible to change things, either because of that reason or because the community doesn't care enough. And so it's just something that I keep a watchful eye on. I know people don't want to hear me gripe about EOS all day long, so I'm done griping. I'm just watching and waiting and putting in my 2 cents when I see it. And just another thing about Bitcoin Cash, it is so fundamentally superior to Bitcoin for not only its 32 meg blocks, which will be increased in the future. It's non-existent congestion. It's almost non-existent fees, like a penny or two. But also it offers things like SLP tokens. It has its own token economy, something that's not possible on Bitcoin due to high fees. And it has its own cash shuffle, cash fusion, anonymous transactions. And some people ask me, what do you think about Monero? And I think Monero is great, but I'm not going to invest my money in something when Bitcoin Cash can do that just as well or better, and with a higher market cap. So for me, Bitcoin Cash is actually a replacement for Monero. And Bitcoin Cash is also, for those reasons, and there's probably more of them that I forgot here, fundamentally, technologically superior to Bitcoin in almost every single way. You can also do merchant transactions, zero confirmation as a feature, whereas Bitcoin introduced this replace by fee, which forces this bidding war for transactions to get into the next block. Okay, yada, yada, yada. Anyways, I just wanted to touch on Bitcoin Cash a little bit there. Bitcoin Cash is definitely superior to Bitcoin. Okay, guys, and that's why I hold these cryptocurrencies. Please share with me in the comments section below what currencies you hold. What do you think about my holdings? Do you agree? Do you disagree? Do you think that these are stupid reasons to hold these cryptocurrencies? And please share this video with your friends. And as always, please like, please subscribe, please hit that bell icon so that you get notified when I do make a new video, and have a great day.